Good afternoon, everyone. Hey, this is Bruce Marshall from Simpler Trading with the nightly video update for Tuesday, November the 5th. And I usually do the videos on Wednesday, but Henry is in Las Vegas at our conference out there. So I am doing the videos tonight, and we will get started here with the S&P. So today we had it was a very weird day. I talked about it in the room today. It's very weird. We had some pretty good overnight, and then we gapped up, early in the morning, and then just rolled back over, and then we just went sideways the rest of the day. And that's been happening quite a lot lately, or the last several days anyway, where we get, this sideways chopping, going nowhere action all day. Excuse me, here are the ticks going nowhere all day. See that plus 500 there, 0 and minus 500. I mean, that's not a lot of push and pull going on here with the ticks or the market, at all. Very strange action. We had it yesterday as well, and you can see here, and kind of a little sell-off here in the end, a little sell-off here in the end. And to me, the market looks weak here. This kind of looks like a topping pattern to me. Maybe not. Maybe it's what I'm trying to see, because I need it to pull back. I want it to pull back. I think that makes the most sense. But I don't know. This doesn't look strong to me, especially with the ticks. And I'm seeing the VIX going higher. As the market's going higher, that doesn't make sense either. So we'll have to watch pretty closely here and see what happens, in the next week or so. I think we do pull back in the next week or so, and hopefully in the next couple of days. That being said, any pullback is probably going to be shallow, and probably will be bought. And the reason is we've got the Fed on our side, lower interest rates. China now, as we seem to be on the same side of the table, a China agreement seems to be, going forward. I know there was a little article this morning about, phase 1 or phase 2 may get delayed or something. If we get bad news, yeah, we're coming down, and we'll come down pretty quickly. But what we need to be focusing on, there's 3100 above us. There's a micro voodoo line there at 3092. And then down here we got Skyline at 3050. I mean, we could come back here so easy, and it would still, we could come back here, or we could come back down here. There's 3000. And we could still be in an uptrend based on where we've come, because look at this down here, 2892. We're almost 200 points higher. So could we pull back 50 points and still be in an uptrend? Absolutely, and it would be healthier if we did that. So let me go out here. Let's go on a little bit even further time frame, and I'll show you. It's a little more obvious here. We've got above us, we've got 3100 here, and then this big tree line at 3118. Makes sense that we would reach up there and touch this, before taking a break. And at that point, how far back do we come? We take a break, we reversion to the mean, that type thing, before probably continuing up higher. So I have been, if you guys have been listening to me for the last month or two, I've been bullish all the way up, and it's been great and all that stuff. But the higher we go, I'm a lot less bullish now, and I'm a lot more cautious and waiting and anticipating the pullback. And the pullback can be something shallow like this, or it could be something, a lot more dramatic like that. And I don't know, but I think it's going to be shallow, probably, to one of these skylines here. I suspect it will be shallow, and the reason I suspect it will be shallow is that, again, we've got the Fed kind of, the winds at our back with the Fed. As long as the China stuff stays on track, we should, the uptrend should continue and all that kind of stuff. Brexit. There's other things out there, and there will, other things we probably don't even know will pop up. But again, I think for the most part, reasonable pullbacks without a catalyst of bad news, reasonable pullbacks would probably be bought. There's still a lot of cash on the sidelines, and people are now, it's the FOMO, fear of missing out. Here when we get to all-time highs, it's kind of crazy that happens, but it really does. People are, they want to get in, and it's all-time high, and so we always scratch our head and go, who's buying at this level? And there's always someone buying, right? So that's kind of where we sit on this. Interestingly, let me show you this. So on the NASDAQ, this is kind of crazy. You see the red line? That's a fire line. That's the strongest line. The green's the second strongest line. And we went right through it. And what's so crazy about this, if you use voodoo lines, there's nothing above us. I mean, there's nothing above us. That's how extended we are. Now David is updating this and adding lines higher and all that kind of stuff. But that's how far we've gone. And this in particular, because of Apple and the tech, some of the heavyweight tech names, continue to push this thing higher. So again, therefore, we have to continue to look higher with a very, very, very keen eye on the downside. And I'm hedging. I've got some hedging already in place on the S&P. I almost put a hedge on the NASDAQ today, but I didn't. I will probably, especially if we reach up here and tag, this tree line up here or something. I will definitely add some more because, and it would be a simple. It's not shorting the market. It is a pullback, reversion to the mean before the next run higher type situation, as is right now. Now, if we get trade talks are back off the table, look out below, because that's what's been driving us this whole time. It's not earnings. Earnings across the board. We're about 70% through earnings right now, earnings season, and we're coming in low overall, and they're not that great. People were expecting them to be worse than they are, but they're still not that, they're not super strong across the board. But anyway, again, we have to take it in this kind of market. We take it one day at a time, and this, we were able to somewhat get a pretty good run here out of this. The next move is who knows. In the perfect world, again, this S&P, in the perfect world, maybe we reach up and tag that, come back down here, somewhere down here, take a breather, and then start working our way back up. It would help us to be able to trade it. It would make it healthier if the market pulled back a little bit. We're very extended. Of course, we know that across the board, and we've got timing for high on the indexes and so forth. So be very careful out there is the main thing. So I don't really have any trade setups. I'm still very light. I'll continue to add hedging as we go higher, and just waiting for opportunities. So just trade light and nimble. Watch and wait for good opportunities. You don't have to trade every day, especially the last couple of days. I've just been sitting on my hands, just watching. So with that, let me wind it up. We do have some schedule changes in the room. I'll be in the bias room as normal, but the main room, we've got some schedule changes, so be aware of that, as some of our content providers are in Vegas. And with that, let me wind it up. Thank you for your time, and I will see you guys at the next update. Take care.